Home prices ticked up in some major markets last month as buyers competed for a limited number of listings, including in Toronto, where home prices were still down in April compared to a year earlier, but have progressively increased in the past couple of months. In this video, I'm going to dig deep into those numbers behind all the headlines. What we're seeing on the listing side of things is that people are still reluctant to sell their home, causing a sort of negative supply shock. New listings are down between 40 to 60% in different markets. A big factor is that a lot of people are not upsizing right now simply because it's too expensive to do so. Rates are higher, and people with a variable rate mortgage would have to reset their mortgage payments and probably see an increase. The low-rise market, detached semis and towns, is significantly more competitive than condominiums. We're seeing more upward price pressure and competition, like homes getting 10 to 20 offers on offer night. Even luxury homes that are priced well are selling quickly in just a couple of days. The condo market prices have been relatively flat. Obviously, the competition is intense, but not anywhere like what we saw this time last year. It's harder for people to be overly aggressive with the current interest rates, but what we are beginning to see is the early signs of this whole FOMO, or fear of missing out. For example, if you're a buyer and you've lost out on the last 5 homes you put an offer on, you're going to be much more aggressive on that 6th home offer. We had a flood of buyers come back into the market with the Bank of Canada pausing interest rates, but the sellers didn't show up. Buyers see prices rising and they worry that they will continue to rise if the bank cuts rates. Even if the bank doesn't cut rates this year, there is still that fear. Also, you hear in the news all about how there aren't enough homes being built for people. If prices continue to accelerate in the market, it's probably due to an overreaction to the lack of listings. If we had a normal volume of listings, the prices would be probably pretty flat. You don't want to be overly aggressive in this market. If we do see more listings come onto the MLS, it could take the pressure off of the housing market. However, I don't think we'll see an influx of listings anytime soon, as it's just not feasible with the current interest rates for most to move up to that next home, which will keep inventory out of the market, at least for the next little while. Investors are not overly active right now just because nothing works at 5% mortgage rates for cash flow. Many of them are just holding on. Right now, they're not feeling the payment shock, but once they have to renew at today's mortgage rates, then we'll see what the impact is on the number of listings available. If you like this video and you found it informative, please hit the like and subscribe button.